This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong. So,
manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
there's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, September 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn down 3/4 at 426. November soybeans are down 2.5 at 1041 1/4. And December Chicago wheat was up 1.5 pennies at 529 3/4. This morning we had an export sales announcement of 110,000 metric tons of corn. It was to Mexico for 25. Weekly export sales in line with the estimates for corn, 1,231,634. Soybeans were 923,018. Small portion for new crop, 2,284 for 26 there. Wheat, nothing special, 377,459. Meal sales, old crop 31,151. On the new crop, they had 151,344. And 22,374 on the oil side. Yesterday, we did get a Fed announcement. They cut rates 1/4 point. The guidance is leaning towards 2 more cuts that are likely this year, and 1 more in 26 is kind of where the forward guidance was discussed yesterday. So we'll have to see what shakes out there. Currently, Dow is up 54 this morning. 46,075. So with that, good morning, everybody. Dustin, maybe share a few comments here this morning to kick us off, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, corn is, hanging in near the highs. We've been unable to fill the gap so far. There's been a gap that I think a lot of people have been talking about, up at 432 3/4 to fill. We're entering that time frame where all those extra corn acres, we're going to see what the market's made of here. If there's a lot of corn that needs to be moved and commercials are full towards the end of harvest, I think that pressure on the front end of the market is still capable of being felt. So you got to think about where your risk is as a grower. I think we have to acknowledge that there's a reason for the rally. I mean, there's obviously the market's trying to tell us something. The market is the best calculator, but I think a 10% rally off the low, we want to consider if you're in one of those areas that's above average yields and your insurance is not really protecting you anymore because of above average yields, kind of sharpen your pencil at this point. There's many things that we can do. We actually had an internal recommendation out yesterday. So any customers that have not seen that yet, please give us a call. But I think that it's time.
Oh, very good. Ben, what's on your mind this morning?
It's concerning to me that we've gotten up by that gap area 3 times, and we haven't fully been able to fill it. Feels to me like we're gonna chop around here for a little bit, and we'll see if they want to be aggressive on Friday again. That's been kind of the MO for a couple of weeks. So just watch and wait. It's a weird trade. Volume starts out really light early, not a lot happening. And then by the end of the day, it's typically been pretty good days. So we'll see what happens. We traded this area out 3 times now where we're sitting. So
What are you guys saying for yield stuff out there out in the east?
A little bit of a mixed bag. We haven't really kicked it in yet. I think this week, kind of from today forward, we'll see a little bit more. In general, things have been pretty good so far in the east, probably a little bit better than expected in most cases. But the one thing that I get from everybody is that's the early planted stuff, and they expected that to be their best, and they think that it will go downhill from here.
Very good. Justin, any thoughts to add this morning?
Yeah, I we basically had a 40-cent rally in corn from the lows. I mean, I think that's kind of an average type seasonal rally from lows. You know, obviously we've had years that are much higher than that, lower than that, but a pretty respectable rally, you know, from call it mid-August lows, and now we're kind of back to levels where crops are still good. You know, we've gone through when we were down at 390, as we've talked a lot on the show. You know, the 95% policies, the 90% policies, the 85% policies, all those were in the money. You know, call them in the money puts. You know, now that October price, the harvest price for crop insurance starts calculating in 12 days, right? So if you think about the, you know, we talk about just, you know, structure of the markets, and you've got these massive puts, all these at all different strikes, right? Because their yield's a factor also. So you've got all these massive, you know, put strike floors that a lot of growers lean on to not have to market, to not sell. And if you think about it, those all start eroding every day starting October 1st, right? By 5% roughly. So as you get a month from now, you know, half or more of that put protections disappeared from the market, right? So the farmer's naturally getting longer the further you get away in price and the closer in time you get away to those expiring. So I do think that's gonna be a big factor, you know, outside of obviously, you know, big changes in yields, big changes in demand, trade policy, you know, et cetera, et cetera. If just looking at the structure of the market, I think that's gonna be very important timing and kind of why we're really focusing with clients right now on how to work through those, you know, those policies and make sure that you're replacing it with something, you know, either concrete sales, you know, other methods to lock in price, you know, et cetera, just kind of knowing how that risk is changing. And then really you're entering into a period of 2 years of crop risk, right? Because it's that window from November 1st to March 15th where you basically have the risk of 2 crops. Assuming you haven't still had old crop corn from last year, but 2 crops of risk. You're buying input, you're making decisions on farming for, you know, next spring, and you won't get another crop insurance till March, you know, unless you're doing MP or some of those things that are going on right now. So it's a very sticky 6-month window of risk, and it's a lot of risk. So I think it's really important to, you know, delve into what exactly that risk profile is. So that's my thing. I just think this is a time of year where that's super important mathematically from how all these, you know, that market structure changes.
Yeah, that's it's a great point, and we talked a little bit about it yesterday. But now that you've set the MP pricing and you've got MCO and some of these newer products, a lot going on. Guys are super busy, but take the time, sit down, you know, pencil it out. Let's take a look, see what the product, if any of these products fit for you. Give us a call. We'd love to help you out there. We just had one of our viewers, Chris from Northern Indiana. He's got the 300 acre field, 180 on irrigated and 50 on dry land. Good yields, not record so far. So that's Northern Indiana dipping in there. So I'd say, Justin, fair to say that's kind of in line with what we've been hearing.
Yeah, it's just, first of all, appreciate the feedback. Yeah, I'd say, you know, like our first field of beans went 87, but we caught good rains in the first part of August. And that's northwestern Illinois. So I've heard kind of mixed, you know, I've heard really good bean yields early. To Ben's point, I think people are questioning what the later yields will be. And then we've heard some just really surprising ones out of like areas that only got maybe ½ inch or an inch in August, but still had, you know, in the 80s for bean yields. So obviously anxiously awaiting, you know, getting into, you know, I mean, we're talking about a few percent harvested right now. So obviously getting into the meat of the acres will be really interesting. Central Illinois, I'd say we're kind of here in maybe mid 70s on beans, you know, 220s, 240s on corn, with, you know, obviously stuff on either side of that. But as we get deeper and deeper, I think my biggest things are, if you look at the changes in acres this year, so much of it's out west. Right. So to me, I think I forget personally, you know, when we talk about Indiana being dry, for example, not to get off on a little soapbox here, but like Indiana being dry or the East, forget how many acres are out west now. Like areas like Kansas. Go look at how many corn acres they have. And you talk about, dry land that's usually 60, 70, 80 bushels, that's 120 this year. 50% higher than a normal dry land type number. Look at the acres in South Dakota, North Dakota, Minnesota. I personally forget a lot until you really look at how many acres are out there. So to me, that's the big thing that's going to really shift how in the ballpark we are on the national level, is start getting good yield results from where all these expanded acres were this year out west. Personally, that's kind of because they did get a lot of rain out there. They, obviously there's questions on disease pressure in Iowa, for example, and all those kinds of things. And I think the market's probably rightfully so kind of stopping at this level and be like, okay, maybe we overshot it. Now we're kind of getting up, what are we dealing with here? And then there are, obviously people talking about, we do have quite a bit of a buffer with the demand numbers written down. So with 98 million corn acres, what kind of a yield are we dealing with here? And unless it's sharply lower, probably going to be hard to make the next leg higher. I guess that's my opinion. I'm still waiting to hear on, obviously there's a lot of chatter online about how bad yields are. I those are kind of dangerous rabbit holes to follow, in my opinion, until you start, getting actual yields from the people you trust and those kinds of things.
Sure. And I think it is interesting to note, when I was visiting yesterday, is the bean program for a lot of growers has become earlier and earlier too. They're really, it's
yeah, I mean, I'd say now, most of our clients are planting beans first.
Yeah.
So it's definitely a different way of treating beans than it was 10 years ago. So now, and my brother says too, in a good year, we're harvesting beans first, right? If we're harvesting corn first because it died or something, but
yeah, right.
So yeah, it's definitely different, and it's gonna be interesting.
No, definitely. We appreciate the viewers that are chiming in this morning. Brett Davis from Central Ohio has got 240 acres at 68. So, and a lot of times too, just for folks' knowledge, and what helps a lot is, where you were at versus a year ago. A lot of that sort of information helps as well, so that you can really put a good, some good thought into it there. But no, certainly thanks for participating. We'll move quickly here over into livestock. Rye, softer markets really continue to develop in cattle, and interesting story out of China, Rylan, yesterday, on them talking about their producers curbing back on production. So I thought that was interesting to note and see. I know it's China, but
Right.
it was certainly a headline here this morning. So I guess maybe share some thoughts here.
Yeah, so cattle market definitely on the weaker side. I mean, we're starting to see these beef markets just kind of crater here. So I think there's definitely this caution that this break is obviously seasonal. We're past grilling season. So, I mean, it's to be expected. So I think overall, we're starting to see a little bit of cracks. Maybe we've made a little bit of a seasonal top for right now, but obviously the trend is still staying relatively firm. We are seeing buyers still really active around the 40-day moving average. And at this point, cash market has been weak, not all that bad though, just considering the move that we've seen in futures. So we saw some 238 to 239 cash trade in Texas. It's light and still nothing in the north, but I think at this point, the market's still anticipating a little bit of a weaker trade, steady to weaker trade by the end of the week. But we got the cattle on feed report. I think naturally you see some repositioning ahead of that. Maybe even see some liquidation between today and tomorrow just for some risk off. But realistically, it seems like the supply scenario just kind of is what it is, and it doesn't seem like we're really going to find the supplies till well into next year. So just a matter of keeping this we had the reversal the previous day, and at this point, there's a big air gap pretty much between some of the longer term moving averages and where the market's trading right now. We are starting to see at least the cutout markets start to soften. Haven't seen too much weakness in cash, but overall, I think that's the kind of concern going forward. And China, yeah, I mean, I think they come out with a story every month that they're going to scale back production, scale back their sow herd. So, I mean, we'll see if that actually happens.
Very good. Appreciate the update there, Rye. A couple things to note. Tomorrow is Friday, so be sure to tune in. It's Fun Fact Friday. You never know what you're going to get. Also, Jack will be in hosting as we go into the weekend, so that's always a lot of fun. So between Jack and Fun Fact Friday, be sure to tune in tomorrow. We are coming into the open here. We'll get a quick readout. December corn down 3/4 at 426. November soybeans are down 1040 and 3/4 is the last there. And December Chicago wheat's up a penny at 529 1/4. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.